Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange, an ETF experience where we're meeting with the top thought leaders and innovators in the ETF space. Joining us is Christian Magoon. He is with Amplify ETFs, CEO of Amplify ETFs, and we're going to take a look at investing in a low and rising rate world. And Christian, this has been a pretty hot topic at this conference.
Yes.
When you think about deriving yield, rising interest rates, finding dividends, finding different areas of fixed income. I feel like this has been a pretty hot topic at this conference.
Yeah, I mean, the bond market here has had a really tough year so far in terms of performance. I mean, we're getting close to being down 10% on broad-based bond benchmarks. That hasn't happened for almost 30 years. We're not even halfway through the year. So what the rest of the year is going to look like for fixed income or income investors is challenging. That's why I think investors need to look in new ways or new areas to generate income, whether they're retirement oriented or just trying to have more of an income stream in their portfolio.
Right, and you have several unique income ETFs with yields that range 5 to 8% at Amplify.
That's right.
Let's talk about why.
Yeah. So YYY is the Amplify High Income ETF. And that's an index-based ETF that is created by the ISE, which is a Nasdaq company, and it's an index of a variety of closed-end funds that are selling at a discount to net asset value. So these closed-end funds are managed by well-known names like BlackRock, Nuveen, PIMCO, but the nature of a closed-end fund is they can actually trade below the net asset value of their securities, so you can buy them on sale. So YYY is a basket of these closed-end funds, about 80% fixed income, 20% equity closed-end funds. You go out and own them through the index, and that generates a yield of around 8%. Paid on a monthly basis, and it's an alternative way to get that additional yield by really taking advantage of the discounted nature of the closed-end fund structure and still having access to a lot of diversification and well-known managers that many people already own in their portfolios.
Right, and especially with people living longer when you think about retirement. What about Devo, D-I-V-O?
Yeah, so Devo is our Amplify CWP Enhanced Income ETF. It's a 5-star rated ETF, and it buys blue chip dividend yielding stocks. But in addition, the manager has the ability to tactically write covered calls on some of these blue chip companies. And what that does is it gives you an income level of around 5% between the dividend income and the option income. So these are well-known companies, really Dow 30 companies that you probably already own and maybe just get the dividend from. Well, this allows you to get some additional income, maybe double the income by having this option overlay on that. That is a product that gives you equity participation, gives you that blue chip kind of, let's say, steady nature of strong earnings growth and a history of paying dividends, but then also that healthy income stream. Again, it's paid on a monthly basis, and current yield is around 4.8%, nearly 5%, pretty competitive to what's out there today.
What makes these ETFs unique relative to other fixed income ETF products?
Well, so they have a growth aspect to them, whether that's dividend growth or having exposure to equities. In addition, they give you generally above market income. Most investors aren't getting 5 to 8% on their income oriented products. If they are, they're taking a lot of risk with that. These are diversified options that can fit or complement an existing income ETF investor's portfolio, or really any income investor's portfolio, no matter kind of the season. So kind of a little salt to sprinkle on that portfolio to have more material yield than what they're receiving today.
All right, Christian, great to see you in person. It's good to be back on the road. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.